Most people look at our website for our fund and wonder what the heck are the advantages of being able to invest in a real estate fund. They also want to know, what do I do? They want to know where the money goes. So I'm going to put some links below this video that will actually show you exactly what you need access to and answer your questions. But there's a few other questions that I want to answer off the top of my head that will give you exactly what you need to understand or know to be able to invest in our vernafund. So what do I do as fund manager? My job is to select sponsors who have a vetted track record and history with being able to provide risk-adjusted returns in multifamily real estate. So that's what I do, which is quite the job. Also, we're able to look at the track record of the returns as far as the bank accounts go of these other sponsors to actually prove up that what they have done and the returns that they've gotten are real. In addition to that, we also have experience as a general partner. So our job is to use our track record to be able to also bolster these partnerships. We are general partners in each of the deals that we invest in. So this gives us the ability to vote, have control, and be able to make sure that there are adequate reserves for construction, for operating expenses, and for the OSHIT budget that you may need or will need on every single apartment purchase or deal that's done. So where does the money go? That's something that's really important for you to know. And when you look at the link below, there's going to be a presentation or business plan that will show you an organizational chart. Don't get confused or too intimidated by it. Essentially, what it is saying is that we have a couple of different LLCs that are set up to grab the funds. There are two different types, but the one that I'm going to cover today is covered by a special purpose vehicle. So it's essentially an entity that is at the top or over the other entity, vernafund D LLC, and this will all be graphically displayed below in that link in the business plan. vernafund D is a accredited only 506C entity. So it has been filed as the receiving entity and bank account for all the funds that go into our apartments that the fund is investing into from accredited investors. Again, that's very clear on this chart, so go look at that. So that's where the money goes. Then once the money hits the bank account, then we have a certain amount that we need to hit to invest at one time into assets. So we want to raise $5 million to be able to take those funds and deploy it. And those funds can buy, it used to be up to 20 million. Now it's more like 15 million in assets, or that much in equity in these assets. So again, that's what I do. That's where the money goes. Something else that we do, not only vetting these sponsorship teams, is also giving you the ability to have internally controlled books or accounting for our fund. So we have a team, and again, this will be in the link below. You want to see our financials, right? So what is our past performance? And doing a financial review or an audit is a way to make sure that we can prove up that we actually have put the money where we said we were going to, or where we said we have on our landing pages. So this is something that we do. And again, that will be in the link below. There is a third-party CPA that has gone through, and annually we do a review or audit of our books. And that is for the fund itself, so that you know what we're saying is being done is being done. I've been in a lot of deals that's not the case. Here's another couple of advantages that I want you to understand. So on top of what we're doing is taking in your funds, keeping it tax-free, depending on the type of entity that you choose to invest in, putting it into vetted sponsored deals that are actually going to produce a return based on all of our track records. And then also managing the funds and making sure that we are getting your K-1s, which is a tax document, back to you. In addition to getting that back to you, we're also putting together all of your annual audit accesses that you get access to. And then in addition to that, you're also going to be able to have your own portal to be able to access all of your documents, and we manage all of those for you. So like I mentioned before, I'm going to list off a couple of advantages that you're going to be getting here. I'm trying to look at the camera by investing in this fund. Okay, so SPV, Special Purpose Vehicle, is the entity that is over the entity that's investing directly in the properties. This SPV, actually what it does is, if you don't do this, but if you invest as an individual instead of a company, it will actually be an entity that is covering you. So if there is any kind of dispute legally on the actual internal in the property itself, then the SPV covers the investors that are in the sub-entity, So what that does is it puts it under one name instead of individually listing out every single person that's on that cap table or in that deal. So essentially, if someone's pissed off, they can't come after you personally or after your entity because they don't know it's there. It's covered by an SPV and then another LLC that you're in. So the men that are mentoring the women, what they do is I'm actually going to give you, instead of a 7% preferred return, a bump up in 25-point basis bump up at 7.25% return. So if that makes sense. So we're incentivizing men to be able to bring in women to their investment. And what does that look like? You can do it two ways. You can pick a girlfriend, wife, a woman in your life, and you can give her read-only access to your investment portal so she can see everything that's happening, returns, issues on the property, just learn. And or I've had a dad that has actually put together an LLC, put all of his 5 daughters in it, and then they're actually being able to become accredited investors because of him. And on top of that, they own equity in the deal themselves. And so then their family decides on their own how they're going to split up those equity checks. Maybe they put it into an educational savings account, something like that. So that is a huge advantage. Another huge advantage, besides meeting our mission of making sure that more women have money in their hands because we're educated and we're giving them opportunities to invest, also the crowdfund portion of this fund gives them the ability to be able to invest without having to have the 50K minimum that's typical in the industry, right? So a lower barrier to entry. That's something that's very important to us. And so if you're like me, you get started earlier in life and you're not waiting until you're 45 and finally have 50K in your IRA to invest, then you're able to get compound interest earlier and be able to make cash flow earlier and be able to potentially leave situations that you don't want to live in or work in to be able to have freedom and independence. So that is important to us, is creating $1 billion invested by, for, and with women by 2030. Also, not only are we helping out women with this fund, is you also, like I mentioned, have these internal controls. So we have a company called Great Lakes, and Great Lakes is our fund administrator. So what they do is they're able to produce all of the treasury accounts. They're able to put together all of your tax statements, K1s, give you portal access, basically give you all of the documentation and the instruments that you need to be able to know that you can see all of our financials and audits in one place. And then if you want, they can actually take care of your tax return as well. But point is we have internal controls, and you'll see in the link below that I'll post that you're able to see our annual audits that we do and to get that extra level of transparency that no other funds really do out there unless they're Reg A, Reg A plus, and they're required to do it. And some of them don't even do it. So also we avoid capital calls because the fund is raising money on a revolving basis until we raise all the funds that we need. So for example, if we have a property that, I don't know, our supplies cost a little bit more. For example, our fund right now has 2 deals in it. Okay, so we need more money for the wood. We already have money raised in our fund, and we'd be able to go add that money to that deal that we already have raised. So instead of going back to the investors and asking them for money, and I know investors hate capital calls, so that's another solution that this fund potentially adds to the deals that are in it. Also, what we're doing for you is, like, for example, we have a deal that we have targeted or we have identified to be able to invest in now, which will finish off and close down this closed-end fund. But what we're doing is we're able to, as a group, invest and get into a better share class. So for example, this deal that I'm mentioning has 3 different share classes. One requires a minimum of 150,000 as a human being to invest in it. The other share class requires you to invest 50K, but the non-accredited spots are already taken by those that put together that offering. And so you have to be accredited to be able to get into the deal. And again, those spots go first. The other class that's available is if you have 500 to $1 million to put in, but then you don't get any equity, you get 12% every year. That is basically as a loan. So then if we're pulling our money together as a group, then we're able to get into the A share class where we're able to get you a better preferred return than the other classes, which is an 8% preferred. And then we're also getting a pref, so we're getting paid first. We're able to get you access basically to a better level of return and a higher split, so an 80-20 split. So you're welcome. You couldn't do this on your own. So pulling money together is so powerful, and that's what we're also doing for you. Again, clearly, I want to make this clear. We have very strict criteria into all the assets that we can invest in. If you look at the fund documents, it tells you exactly where we can invest in Texas, exactly the size of the deal, the class of the deal, and basically it's the same as the kind of deals that we've done before the last 9 times. And so this would make it to where the only way we could legally invest your funds in a deal is if it meets these criteria. Also, it meets the same, it meets the the return criteria that's specified in these documents. People think that we can just go invest in whatever. We can't. And that's illegal. And I'm someone that wants to do things by the way that I set up my documents to do it, period. So there's no worry on the end of not knowing what kind of asset or what kind of market or what you're getting your money put into. In addition to that, like I mentioned in posts before here, that you also are able to get into a fund that is not a blind pool fund. If you click on the accredited button below or the link to the accredited offering and invest next, you can look at all of the offering documents, slideshows, underwritings, etc. on the deals that are already invested into. One of those deals just received an offer for purchase yesterday at $3 million more than we purchased it for, and then the other one is going through refinance cash out right now. So just know that you can see those deals, and based on the predictions or projections, that they are performing or that we are doing what we said we were going to do with the business plan. So you can see the deals that are in there. Then this third deal that we've identified, we can give you the underwriting documents right now if that's what you want, but we post those publicly once it closes. So you can see what's in the fund. It's not a mystery at all. And then also, like I mentioned before, we have GP team control. So that means that our experience and my experience is actually in the general partnership. And so I'm able to vote and make decisions that benefit all the investors in there to protect your money. Again, this is a closed-end fund. So what does that mean? It is not an evergreen fund. An evergreen fund goes and takes your profits from refinance, from sale, from cash flow, and it's a variety of all of those or some of those, and keeps reinvesting your proceeds into other parallel funds or other deals without you being able to decide if you want to keep investing or not. This does not work that way. This fund, once we have raised the $5 million in the fund, it closes down, the money is deployed into assets, and then the moment that any capital events happen, we get you your projected return back, and then we back off, and then you get to decide if you want to roll those into our next fund, or if you want to retire on them, or if you want to go invest in banks or cryptocurrency or the stock market. Wouldn't suggest it, but you can. But that's your choice, and obviously choice is key here, right? And so also we are looking to create 1 billion invested by, for, and with women by 2030. So this is one of our first funds that is getting us to achieve that. Next fund will be much larger, and so we already have a plan to scale up once we scale up your returns to keep rolling them tax-free forward into the next couple of deals that we get, but also to reach that goal of creating educated women who also have opportunities to invest because they can afford to invest. Also, 80-20 split, super generous. So whenever you're investing in this fund, like I mentioned earlier, 80% of the net profits will be split with investors, and 20% go to the operating team or the management team of the fund. You are actually an equity holder in the deals themselves. I want to make that clear. Some investors get a little confused thinking that, okay, maybe I just own shares in the company. And so then there's a valuation to those shares. And so that's what I'm able to write off on my taxes every year. And then if there is some kind of disbursement, we'll get that. But I don't actually own equity in the company, so I don't get any tax advantages. That's not the case here. You get these tax advantages because you actually own equity in the deals. It is based on the pro rata share or the percentage share of how much of the fund you bought. So if we're deploying $5 million, you purchased $100,000 worth of shares, do the backwards math on your percent ownership, and then you have percent ownership in all of those assets at that level. So you are able to receive your percentage share of the profits. Also, we have a 5-year projected exit, which is normal for all of our deals. It's the same as a deal. We tried to really structure this just like a normal one-off apartment deal so that it's just like, okay, we'll just do it again. We have, 9 times. Also, you are able to, I want you to know that what we're trying to say, what we're trying to present this to, or this opportunity to, are really like men who are brothers to women who are fathers, who are those that are in a relationship with a lady, who are married, those that are uncles, those that see women in their life that really could use a hand up whether it comes to education or actually getting a return on their money and being able to create independence for themselves. And so we want you men to get involved with this fund. That's really who this is for. So it's really important that you advocate for the women in your life, and that we get rid of that wealth gap. And how we're going to do that is by being able to take this money, invest in cash flowing assets. They cash flow day one. Also, we hire women, and we're looking to equally hire. And so we have to make sure that we have an equal representation number of women on our team, which normally isn't the case in multifamily. That helps them to make more money as executives. And so we're empowering them also to have more money to invest themselves into real estate. I mentioned already before, we have published financials. You'll find those below in the business plan as well. And then also right now, what our goal is to do in the 5-year term is very short. We're looking to do a relatively, basically a flip in multifamily with these deals. So it's really not like a 10-year hold on this one. And we did that on purpose because this is our first fund after doing 9 deals. So why we wanted to do a flip is because the goal here is to take your funds that you make and to 1031 those in a group into a much larger asset that is going to create wealth forever. So next fund is going to be full of assets that we'd have a long-term hold on. So you'd be getting cash flow in a small amount here, you'd be getting equity in a small amount here, but in reality, what we want to do is create generational wealth. And so how do we do that? We create capital gains for you and passive income, both. So that's important that you're getting those capital gains, and it's hard to get that when you have these short flips, right? So this fund gets you income, and then we are wanting you to get the performance and then move into our next fund where you're able to get capital gains. Again, remember the entities themselves. What is the name of our vernafund D, vernafund 20 LLC, and then vernafund CF LLC? These are the 3 LLCs that are investing, that are the company holders that will be distributing funds to you into your bank account. That'll be in the link below to the business plan, that you'll be able to see the organizational chart, which will show you all of these. And so it's just very clear that we have to disclose our entities. And then also I want to make a case, why wouldn't I just go invest in Warren Buffett's Berkshire Hathaway company, right? So here's why. Because I think it's important to take money from Wall Street and put it into Main Street. I think that Warren Buffett and some others are wealthy enough as it is. And I think it's time to take those of us who are little girls and guys in this game and be able to give us an opportunity to create generational wealth for our families too. So I'm giving these opportunities out to friends and family members instead of going to large private equity groups or banks, which have promoters who could just give me the cash to do these deals because they want the returns. They're way better than they're getting in bonds and stocks. So instead, I choose to turn it around and give these positions to investors that are my friends and family and those that are watching me right now. This is an opportunity for you to be able to get the little guy being able to get access to things that only previously you would have access to if you were a large organization, if you were a fund, if you were a BlackRock, Blackstone, etc., or like a bank with a promoter. So this is something I'm giving you to be able to give you a leg up in your life early on. And then again, we have the crowdfunding offering, which what that does is that makes it a lower minimum so that you're able to get in. And these big companies, they don't do that. They know how to basically say, here's what you're going to pay me, go away, because they have the expertise and they have the track record to just turn away people, right? For us, we wanted to make it more equitable. And so we're giving you an opportunity to be able to let little guys make money, right? You get access to these deals. It's taken me a year and a half to be able to structure these legal entities to give you these opportunities. And it's taken like all of my money to do this because I believe in what we're doing. And I know that you believe in it too. I know that you believe in creating financial independence. I know that you believe in making great returns. I know that you believe in creating generational wealth for your family, and you can do it all by investing with us. And again, I'm going to add some more links below once I post this video back on our landing page on our website. But we are going to be doing, again, an annual audit, an annual review of our financials so that you can see that and to be able to post what our actual, we have case studies that I'll be posting again. You want to look at those because those case studies are going to break down to you. One of them has like a closing statement because it was in Phoenix, so I can actually show you the actual closing statement. What did you go in with the deal at? Who got paid what? What were your actual returns after fees? And then what did the investors make? That's disclosed. And you really want to see as much information disclosed as possible. So below this video on our landing page, and then also if you go to the landing page linked below here, by the end of the weekend, I will have posted those case studies embedded into the site. You need to look through all of them and to see what our plan was, what we projected, what we came out as, and to look at our track record, because that is the number one thing that is going to show you what's going to happen with your money is, history repeats itself. It's not a guarantee of returns. However, history does repeat itself. So that's important that you see that. I'm also going to be adding for you a graph to the website that will show you the overall market in multifamily, how it's performing and how it's performed consistently over the past 30 years, why this is such a stable asset. People always need housing. We buy assets that are not brand new, and so there is no supply, but there's high demand. So we're always in need of renters. Also on one of my properties recently, and as we grow, we're going to do more of this in a permanent partnership. but I have taken on a couple of residents that are single mothers, that have moved into a property that we have because we've worked as a partner with Center for Transforming Lives in Tarrant County, Texas. So again, we're focusing in DFW, so we'll keep doing this. But we're able to take single moms that have little kids that are, have one on the way, and we're able to take the funds that the organization puts together to pay for the rent for a couple of years and give them a safe, clean place to stay where she can raise her kids and not have threats of the life that maybe she needed to leave. I've been there. So again, this is just whether it's the asset level that we're doing something to involve ourselves in the community and making a difference in helping women to get literate, to get their own jobs, to get wealthy, to be able to take care of themselves and get out of codependent situations, or whether it's with our investors and we're having other investors bring more women in to be able to learn more about investing in real estate so they get comfortable, so they have knowledge, so they will take action, or whether it's advocating for the women in your life and you're actually investing beside them and giving them equity right away. I mean, that's what I would prefer and suggest, because the sooner she starts, the more wealth that your entire family is going to make long term. Women are also outperformers as fund managers, so that's another thing, is we tend to be risk averse, and so we're able to, if you look at hedge fund managers, make 30 to 60% better returns than other hedge fund managers. And then we're also able to advocate really well for other people. So as a fiduciary, being responsible for these deals, that is the most important part of what we do. Are we thinking of the whole organism or just the cell, when we make these decisions? And are we fighting and advocating for our investors? Yes, and I've done it many times. So these are just some things I want you to be aware of that you're going to get as an advantage whenever you are investing with us in our fund. There's so many, it's incredible. Everybody else and their mother does multifamily deals, but they don't have a mission. They're not impacting their community. They're not even making as good of returns either, but we're doing both. So this is just a slam dunk, done deal. We need you to invest. Otherwise, what our next step has to be is that we have to go to a different type of public offering where we go to banks and larger companies and funds and family offices, and we ask them to give us large chunks of money, and we stop talking to our smaller investors, individual friends and family, and those that watch us and know us, so that we can close these bigger deals and start impacting the community, because now is the time when those are fearful to be greedy. And so we have been putting out tons of offers every week, and now is the time that we're going to go in and we're going to buy all these deals. And so it's the last opportunity here for you to understand what the fund is offering you, how we're going to impact your life, the community's life, those around you, the women in your life's life, how we're going to create generational wealth for future generations by working together. I just laid out the entire plan here. Again, this is something with the 1031 exchange that once we perform, moving those funds forward deal after deal, what I'm looking to do is recreate what the man that I learned from doing all of this, what he did. Made these investors 2,000% return on their initial investment because they didn't pay exit fees. They didn't pay taxes or capital gains on their capital gains taxes on their gains, but instead making you the gains and keeping them tax-free and making sure that we're continuing to roll them into bigger and bigger assets and making more and more income. The more scale, the more income, okay? So we have the operational capacity, the wherewithal, the operations, the team, the knowledge, all of the people in place to be able to execute these deals. And it is your duty to be able to look out for the financial independence of the women in your life and to create financial independence in future generations by giving them generational wealth. And this is how you're going to do it. All right, guys. Kaylee McMahon with Apartment Queen Investments. Click the link below. You can invest with us or get on a call. Thank you.